Good afternoon, everybody. How are you? Get started here in just one second. How are you today? Look at all of you. Oh, it's so good to be here. Thank you for hanging out with me today. Happy Thursday. We made it through 3 solid trading days, Tuesday, Wednesday, Thursday. I'm so glad to be with you. And I wanted you to see my ugly mug before we got too deep in the weeds here and just let you know I'm a real person. I'm a real person. I have feelings just like you. Hey, let's get started. What do you want to talk about? There's so much going on in the world and in the markets today. And this is us. Whoa, big PowerPoint presentation. If you're not familiar with the company, what rock have you been hiding under? No judgment if you're hiding under rocks. There's lots going on in the world that's scary right now. Just found out today North Korea's got soldiers in Russia. That's fun. They're blowing up apparently banks under hospitals and civilians, and Jamie Dimon, one day everything's great, the next day the world's on fire. If you live on the West Coast, it is. If you live on the East Coast, you're underwater. It's all good. Volatility is good when this stuff happens. So the premise of the software we're going to talk about today is this idea, this understanding that maybe the things that are happening in markets are not as random as we've been led to believe they are. And honestly, that's a hard pill to swallow. And so one of the ways that we're going to get around that is by giving you, all of the customers who don't have the software, a couple weeks worth of the forecasts. And we'll analyze, for example, today, how these times that we've known about since Tuesday played out in an actual live market here today. And how, with a program like ours, we already know the signals for tomorrow. And so we fall into this predetermined well, if you will, where we're waiting for things to happen. And we'll go over some ways that we can trade those here in a moment. But this idea that markets are sort of random is going to be sort of dismissed here by the end of the webinar, where we're sort of looking out into the future to see what are the next times and directions that we're expecting markets to move. Is the gentleman who was interested in feeder cattle futures here today? I wanted to make sure he was here. John, okay, so I checked for the feed before I checked for the feeder feed before we got started, and I do in fact have it. So I do wanted to make sure that you knew, that I knew, that they knew that you were interested in that, and so to get some of those signals out in front of you. So we'll be going over that too. Appreciate you hanging out with us. Oh no, it works for them. Oh no, nay nay shenay, it works. Let me preface everything I'm about to say with the following statement. If tomorrow they created a new instrument called peanut butter and jelly futures, if tomorrow we had SpaghettiO futures, if we had insert ridiculous thing here, Michael Jordan's sneaker futures, the accuracy of the program would be the same. Because two things. every market we've looked at for nearly 20 years, no matter what customer has ever asked for what instrument, the accuracy has been the same. So we sort of have that legacy behind us to reference. And number two, people are still people. People are predictable. Do you believe that people are predictable, or at least they have patterns that are hard to break? There was this guy named King Solomon who was rumored to be the smartest man on the planet. And Solomon wrestles with this idea. John, I don't want to go too far off track, but we'll come right back to it. But he wrestles with this idea of predestination versus free will. And here's a man, he would be the modern day equivalent of a billionaire. An Elon Musk, a Bill Gates, probably not a Zuckerberg. We're veering too far to evil. But he's not denied anything. He does everything, he builds everything, he's done it all. And he's worked with people a lot and observed things. He has a lot of time to think. And he comes to this conclusion. He says, listen, these things keep happening over and over and over again. Everything that's happened in the past is happening now, will happen in the future. It's a very astute observation for someone in an ancient text. And so when we're looking at feeder cattle futures or soybean or corn or whichever, whether it's on a 5-minute chart or a daily chart, people are still people, and everything that has happened will happen again, over and over and over again. So we'll work our way up into feeder cattle futures in a moment. We want to sort of ease into it with this understanding of how do we prove what I'm about to say is real? And so, John, why would you or anyone else believe anything, right, that we sort of have to say? And what we're going to look at here in a moment is an experiment that's really designed for transparency. What do I mean by that? I mean, every signal on this chart was provided to about 18,000 people about 2 days ago. What does that mean? Our premise, our belief, is that institutions, in large part, the 5% of the world who control the majority of the equity shares of the world, don't trade the way you and I do. Markets to them are not the same as they are to you and I. To you and I, there's sort of this chance to go to a legal casino and count cards. To them, it represents an opportunity to control the prices of cattle in the entire world. So, John, they can decide if Venezuela is going to have a good year, if they're going to put pressure on the government there to get what they want in terms of oil development rights, right? Big, powerful BlackRock stuff. And so those decisions have little to no bearing on the rainfall, the price of corn or feed or hay, the price of diesel to transport. It bears in large part on their desire to maintain geopolitical control. How do you feel about that? Would you agree with that, or you disagree with that? Do you think BlackRock trades the way you do with a 20 period moving average. Yeah. So what we try to do is send the software backwards and look for times where movements are occurring with, I call it irregular regularity. So we're, what's the name of that movie, that Alfred Hitchcock movie with the guy in the window? Rear Window, is that the one where Jimmy Stewart is looking out the window all the time? Oh, billions. Not even millions, it's billions. And so what our software is doing is we're looking out that rear window at the data that the markets leave behind. And we're asking, are there any patterns? Who comes to the window? What time of day do they come to the window? What shirt color are they wearing? Only in the case of the software, we're looking at the raw information and sort of projecting forward into the future, whether or not they'll do it again. So here's what I mean by that. I think it's pretty interesting. I don't know, you might not find it interesting. I think it's cool though. Let's go back to that chart. So on the 5-minute E-mini S&P chart, 4 days ago, John, the software did just that. It looked backwards historically, and it said, are there, thank you, James. When the program looked backwards, these are the times on the top of the chart from 4 days ago. These are the times that the program noticed sellers coming to the window regularly enough. And then, John, these are the times that the program noticed buyers coming to the window quite regularly. Does that make sense? And so all that was sort of left to do was wait for Thursday, today, since Thursday, Wednesday, Tuesday, Monday. So the data was available since Monday for you, projected forward into Thursday. Everybody with me so far? Now, John, this is an important step because when I show you the signals 4 days later, it will lend credence or credibility to the signals we're going to look at for feeder cattle. You'll know that any signal on the chart was predicted days in the future and wasn't simply something that was marked after the fact. Okay, so I need to establish that credibility with you first with the stuff I posted the times and directions for you to lend me any credibility whatsoever. Okay, cool. Great job. Now, when we come here and look, I'm just going to circle a few times just so you know that they're the same. 9:10, 9:10, 10:15, 10:15, 8:35, 8:35, 105, 105. So everybody, you can see that the times that are on my chart are actually from the histogram from 4 days ago, right? Think of it like a weather report. The sun will come out on Thursday at 7:35, followed by clouds at 8:35, followed by sunshine at 8:45, into clouds again at 9:10, followed by sunshine at 10 a.m. Okay, a little weird to think of markets that way, but if you believe what we believe, it's not entirely outside of reason. Now, how do we trade it? There's a difference between the signals, the raw data, and the setup. And so with that actual, see if I can get it here, trading system. With that actual setup, I taught a trading system See if I can find it. No, I don't have it. On the web page that I gave everybody, there were two signals that we were going to talk about. One was called a signal with trend, and the other one was called a puncture. And I gave a list of rules for the trading system. So John, here we go. On this chart, before we ever got here, I said we were going to reference a 120 period EMA, an exponential moving average. Then I also said that we were going to utilize a 1.5 average true range stop. Average true range is measuring how big a 5-minute bar is lately. And so when the ATR is small, when the range of the bars is small, the stop is small. When the range of the bars increases with volatility, the stop increases. Does that make sense, everybody? The distance from the candle to the stop lines is dynamic. When the market is slowing down, it's closer. When the market is speeding up, it's farther away. It's a dynamic risk management system. So at 4:35, small stop, 10:15, larger stop. Then we said we were going to use one of two different entries, two entries which are based entirely on trend trading. Okay, so number one is called a signal with trend, and a variant of that is called a crossover from the notes I gave you. And then number two is called a puncture. Let's go over what those two things are and how it played out 2 days later. All right, let's do a US session today. At 7:35, John, we were expecting a buying pressure signal since Monday at 7:35. So this whole chart was blank. Just like the future signals, there's no bars there yet. Kind of weird. So what we're going to do is we're going to track all the signals with trend. We enter at the close of the 7:35 candle, comes notoriously close to our stop on the other side of the white line, and we finish with 4 magnanimous ticks. Woohoo! 8:35 is not a signal with trend. 8:45 is a signal with trend, and we finish womp womp, 7 ticks in the hole. Now 9:10 comes, it is not a signal with trend. We're above the 120 until 9:30. Ding! And at 9:30, we have one of these crossover trades. We're expecting a selling pressure signal. It's falling, and then it closes underneath the moving average right here, around 57.25. With a crossover signal from the rules we published, our stop is just over that candle, 2 ticks. And now, John, we enter short until the end of the selling pressure window. Ding! +1, -1 3/4, +6. Everybody tracking? Cool. Stink bug in my office. Get out of here. Next signal at 10:15 is a signal with trend. It goes in our direction, against us, in our direction, and John, we finish at the end of that window at 11:05, +6. So far in the morning, if you waited for the open, you're up $12 or $600 per contract. 11:05 is not a signal with trend. However, it becomes a puncture. This stop line right here, John, is a no man's land, meaning if the market gets down this far at a time we were expecting buyers, it's essentially a red flag that tells us this is a time where for the last several weeks, the prices have gone up and continued up until the next selling pressure time. So the equivalent example metaphor would be, at my house, the UPS driver that services our neighborhood is here somewhere between 10:15 and 10:30. If you haven't gotten the package that you were expecting, right? Prime promises you next day delivery. It's never next day. But you look, no UPS driver, 10:30, 10:45, 10:55. I'm not going to stand on the porch until lunchtime because that window is closed. He's probably not coming with my package. Does that make sense? So with a trend trading signal, what we do is we say we're going to short it if it breaks through a buy stop line below the moving average. And so right here, we take what's called a puncture, where it punctures the buy stop line in the direction of the trend. And we're going to hold it until the next selling pressure signal. So we're short right here at 8:35, and now we exit at the close of the 12:10 signal, another $6.50. Okay, our stop on a puncture candle goes 2 ticks above the high of the candle that punctured that stop line. Make sense? Cool. Now, it's not all roses and cherry lollipops, because here, well, is our first stop. If you trade during lunchtime, which some of you do, some of you don't, you were short at 12:10 and out at 12:35, and you gave back 14 of your $19 at that point. Short at 105, out at 110 plus 3 ticks. Short at 140, out at 225 plus 5 ticks. No good, no good, no good. Puncture. The stop is hit right there, minus 4.5. Bellwender, when you have a setup, there is no setup that works best. So you understand the statistics of your model. Most of the customers who are making the most money follow a trend trading system, right? So you've been taught by vendors online that it's possible to have a 90% profitable trading system. How many of you have seen these ads on Facebook Marketplace or in your emails where they market a 90+% trading system? I call these Bernie Madoff systems because they're not real. I haven't met anyone in 20 years who has a 90+% trading system. We do have a customer who just posted a review. Carl just said he has a 93% win rate this month, but that's not a nominal experience. So on Thursdays, what I teach is a trend following system. And on average, the customers who are making the most money are following a trend following system. Trend following systems on the average are 45 to 55% accurate or profitable, but they have a profit factor somewhere between 1.5 and 2.0 or more. So Ballwinder, do you understand what those numbers mean? The equity curve rises, but your winners are much larger than your losers. That's about 2/3 of the customers using the program. The other 20% or so are following what's known as a mean reversion system. That means if you're at the upper Bollinger Band, for example, and you have a selling pressure signal, you trade it to the middle band or the lower band. And so a mean reversion system, that has a profitability somewhere around 65%, but your profit factor goes down and it's closer to 1-to-1. So the people who make the most money in general, whether it's with our system or others, are following a trend following system. I want to say probably 65 to 70% of people that I've asked, how are you trading, will say I follow the trend. So we try to keep it simple and emulate that here. If we go back and look at yesterday, in that same frame of time, let's just add them up here real quick. Around the same time, 7:40, okay, 8 o'clock we start. We're out by 9:25, that's plus $8. We puncture, we come up, we hit the stop, -3. We puncture again, and then Bellwinder, we're out at 11:20, plus 16. We're short from 11:20 until 12:25, plus 8. Let's scrunch it up. We puncture Bellwinder here at 105, and we're out by 120, 875. We're short at 120 until 155, plus 6. We puncture, come all the way down and back up. We hit our stop, -3. We have a short at 3 o'clock and the stop is hit, -8. So quick summary, 23, 31, 39, 45, 42, 39 -7, 30, let's call it $30 yesterday. Which is about $1,500 per contract. And then today, what did that add up to? 1, 7, 13, 19, 20, 21 -5 is 16, -14 is 2. So at the end of the day, this was break even. So $1,500 across the 2 days so far. John, are you tracking so far? Okay, cool. So the question of which time frame works best is sort of answered by your trading style. These were the signals yesterday for the 3-minute chart. So I gave the signals for the E-mini S&P yesterday on a 5 as well as a 3. And so when we look at the 3-minute chart, we can compare and see that today there was some more granularity, right? Meaning there are more signals in the same period of time. So long at 8:42 plus a point, crossover signal below the moving average out at 10 o'clock plus 11 points, short at 10:18 out at 11:06 plus 9 points. Here's that stop out unavoidable plus 12, and now you're kind of working through the chop on the other side. But what's cool about it is we already have the times for tomorrow. So on the right hand side, if there are any patterns that the banks are following lately, they're waiting for us over here. We already have them for tomorrow morning session. We have them out into tomorrow afternoon, into Monday of next week. So the fact that we have any coherence at all between the markets and the forecasts is pretty amazing, I think. Let's go look at the weird one, the one that I like to trade that kind of blows everyone's doors off, is the NASDAQ, the E-mini NASDAQ futures. And I had the audacity to give you the times on a 1-minute chart. Now, just a cursory examination, John, just letting your eye look at where the signals appeared. Would you say that the most volatile, unpredictable market in the world was predictable or unpredictable when we start to look at the times when the moves were expected? So like 1018 here, 1011 down below. Do you notice where those highs are coming in and going out? It's kind of freaky, right? Yeah. So it's a big gap though between your believing it and me proving it. And that's one of the reasons why this webinar is so hard, because I have to prove to people in a 60-minute window that everything they believed about the markets was either true or false. And for most people, it's false. And so I'm kind of asking them to recalibrate everything they thought they knew about the markets. Yeah, so the timing is kind of weird, right? It feels like someone's looking over your shoulder those times. Here's the European session in the NASDAQ last night. And it just looks like, to me, an airline schedule. Southwest arriving at 3:22, Delta landing at 3:40, American Airlines departing at 3:47 and 4:15, Spirit Airlines departing at 4:34. There are these very low risk opportunities. And then if you look at the NASDAQ yesterday, during that descent, you could have shorted one or two of those patterns and hit your daily goal in a short period of time. Any questions about that? Before we continue. So it's a very high bar to prove that this is happening. And if we look at markets like gold futures, for example, we can look at where those times came in and what the markets actually did, and be on the right side of the trend going up and on the right side of the trend falling. And day after day, John, they just have this schedule that they follow. And you have to put yourself in front of the elephant instead of walking behind it, right? It's 6:10, time to load up. 8:15, time to load up. 10:15, time to load up. 1:10, time to load up. 2:45, time to load up. John asked a great question. He said, have you thought about incorporating trailing stops? So when we first started, true story, we taught a very specific entry and exit protocol. And we thought, if we tell everybody exactly how to trade with the times and take away all of their thoughts and desires, just like the architects in the Matrix movie, everyone will be happy and blissful. And everyone hated it. So what I'm trying to do here is open people's eyes to the truth of what markets are doing. And then, John, everyone trades it differently with different trailing stops, trail underneath the candles, trail on the candle highs or lows. Every single person who uses the software uses it slightly differently. And so my goal in the webinar isn't to tell people exactly how to trade it. I give them a very basic bare bones system where I say, look, if the moving average is rising and we gave you a time 4 days ago that was up, our stop is this far away and we get out at the next time. Think how ludicrous that is. For just 1 second, how insane comparatively that is to what other vendors do. So what would another vendor do? Here, let's remember what life used to be like, right? Let's look at the Russell. That was the market we were looking at this morning. We'll load 1 day of the Russell. And so, John, back when I was trading without my own tools, I would have a vendor that would use what I used to call a Las Vegas chart. And those charts invariably had so many things on them that it was virtually impossible to keep up. Have you ever seen those? Many of you guys had. So they had, yeah, but when you attend the webinars though, this is where I find most people. Usually some guys, if they're really funky, they get to put the CCI on there, right? And you look at that and you're like, oh. And then the vendor will explain to you what they did after the fact. They'll say, now, John, here in our live room, our Super Titanium Pro Trader course, you're going to notice right here, see the confluence of the three green lines? And so here I'm seeing my slow MACD start to turn up, and we've got quite a large slope here on the Chaikin Con. And so once I touch the upper Bollinger Band, and I look at a few other things that we mentioned in our titanium course for those of you interested, I got long here in the room, and then I got out. The first time I saw that red candle, and because we're so smart, we knew not to do anything else over here because none of the conditions were favorable. And you're like, I don't understand anything you just said, but you sound smart. There's so much going on here. I feel like it's a puzzle I can solve. And so I try to go like this. Look, JP Morgan got caught pushing the markets up. And so April 1st, we're going to look for a move until April 22nd. They got caught pushing the market up, and we're going to check and see. Oh, no, we got stopped out. They got caught here pushing the markets up, so we're going to try. They got caught here, so we're going to try. They got caught here, so we're going to try. And they got caught here, so we're going to try. You see what I mean? Cross over the moving average and try. And we keep it simple. And what I've learned, people ask, well, if it's working so well, why are you selling it? Because here's the fun fact. When you sell an awesome tool, and this is something I don't say often enough, incredible traders use it and then tell you how they are using it. So the best traders in the world, and some of you are in here, are sharing what you do with it back with the creators. Holy cow. And as complicated as this chart is what you're doing. So we have a Skype group of users. I don't know if Matt or Drew mentioned that with you. And so the users will actually come in here and John share the results of what they're doing. And when you start to see that, you're like, oh, and here's one of our most profitable customers. And so people are coming in here and showing you, hey, this is how I use it. And it looks remarkably similar to this. So we try to keep it simple. Chris, it would work the same, right? That's sort of asking, he said, how would it work out on cash or spot gold prices if data was available? That's sort of like asking how would it work on SPY instead of the E-mini S&P. And so if we put the chart on SPY instead of the E-mini S&P, Chris sort of works out the same, whether it's on a daily time frame, a 60 or a 5-minute chart, right? The accuracy sort of parses out the same, you know, all the way out to, I think we can get a weekly chart now. Yeah, so there's SPY on a weekly chart. Hey, James. Any questions so far? It becomes particularly useful. We have some customers, for example, that have trucking companies that are monitoring the price of oil and fuel to make sure or they know when to load up on their reserves of oil. We have customers that are monitoring the exchange rates of the currencies in their country, Australia, Canada. Ugh. If I can get prices closer to parity, I can buy more things, I can invest more in my business. And so if you know that the price of oil is set to rise October 25th until November 13th, and there's a 60-70% chance that might happen, good time to load up now, right? If you were short on oil on the 5th, we posted on all of our social media pages that the price of oil was going to rise from the 13th until the 3rd. That's canon. That's electronic canon. You can go look on our Facebook pages, our Instagram pages. That's there. And so then we warn people down from the 3rd until the 25th. So futures or spot cash, it's kind of all the same, right? You're looking now at the euro US dollar, for example. And James, do you see any kind of disparity in accuracy between the currency futures or the euro US dollar on a daily chart? No, right? The highs are near the actual highs about 60-70% of the time. And then as we go down in time frames, daily to a 60, the accuracy is kind of the same. The cool part is that what I'm doing with this program isn't much different than what someone else was doing over 100 years ago. How many of you are familiar with William Delbert Gann? One of a bunch of kids on a farming family plot out in Lufkin, Texas. Educated, mom made the kids read books. His brother John goes off to New York, starts a big business, stakes out Gann as a trader. Gann spends hours and hours in the libraries studying patterns. He's sort of like a modern day Solomon, very ethereal when he says things. You kind of feel like they're shrouded in mystery. Well, the neat part about Gann is he's pretty documented in terms of what his results were. People actually paid a lot of attention to it. And this was an article they wrote about his observations of these time signals over 100 years ago. And I want you to see down here. It always takes me a second to find it. Yeah, we have seen Gann in one day, 16 consecutive orders in the same market, 8 of which turned out to be either at the top or bottom of the swing. You guys see that? This is 1909. So when Gann looked at these time cycles, this predictability of humanity over a century ago, they're saying about half the time or more, the actual signal appears near the high or the low. And so looking at the euro dollar 100 plus years later, John, it's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Let's give this one some grace. 12, 13, 14, 15. So when you see this happen for 100 plus years, and then as a customer with 15 years of Trustpilot reviews, when these next signals come along, it becomes a new operating system and your brain rewires. You're not watching every tick of every bar. You're glued to the screen like a blue-haired grandma at a slot machine in Las Vegas, right? Tick, 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 ding. Tick, 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 ding. Tick, 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 ding. That's how everyone trades that doesn't have our stuff. It's this constant fire hose of information, and the longer you sit there, you lose and lose and lose. So right off the bat, there are these windows of time where you can literally walk away from the computer. In my room, you'll hear me. I get up, I go over, I look at the couch, I clean up around my desk. I have a little squeegee bottle thingy that I use to wipe up some dust. I clear my brain. If you're taking longer swing positions, leave the room. Go do something. When you're away from your computer, you're less likely to move your stops and alter your targets. Okay, so any questions about that so far? Sweet. Now, just a quick observation while we're here. I want to go out and look at our daily ES chart because something really interesting is happening that I just want to bring to your attention. Might mean nothing, could mean something. We talked about it yesterday in our room, and then again today. This is my E-mini S&P chart on a daily time frame. Yeah, John, I have a template that I use for everything, and you'll see my ATR stop is set to 1.5. So I have a template that I apply to all my Thursday webinars. It's AA, template load, and you'll see on my list AA, just to get near the top so I don't have to search for it. Every chart on here has a 1.5. Okay, so here's what's really interesting. And let those who have ears to hear it. I have been preaching for a really long time for a collapse of the stock market. Have any of you been following along my Facebook, Instagram stuff, or the webinars there? And I've been referencing the 2008, 2014 cycles. Let me show you the chart. Sorry for the coughing, but you know, if you know, that I'm much better than I was the last 2 weeks. I promise it's here. Our social media program is kicking butt, by the way. We're trying to do a better job for you guys. Here we go. So what I've been doing is noting the similarities between the movements between 2008 and 2024. How many of you have been following that? And so we're basically looking for markets to begin to fall and put in their all-time high right around there. Does that make sense? Because of what we've been following from 2008. So John, can you see here 11, 12, 13, 14? That sort of marked the high of the 2008, 2007, 2008 run up before the Great Recession. What's interesting is if you go back, you find this post on our Facebook page or our Instagram page, almost every one of these times lines up with what actually happened in 2024. It's really fascinating if you get a chance to go look at it on your own. Almost all the times are identical. So when we came into October 11th, we had a daily signal on the 14th of our warp chart. And so, John, you can sort of see here, I'll draw a horizontal line right there. And it hasn't really pushed through that, has it? More importantly, can you guys see what happened at the 1018 signal? How it's kind of been falling and falling and falling and falling and falling. This is a more advanced interpretation. And this is somebody, John, who's waiting at their front door for a UPS driver that isn't coming, right? Brown truck goes by. Are you the UPS driver? No. Are the buyers coming? Doesn't look like it. So at a date, we were expecting prices to rise higher. Cricket, 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 cricket. I thought everything was great. New world order, lower interest rates, kumbaya. And we're seeing a degradation of the market. It's not rising the way that it just did from the 9th until the 14th. And so when you see that vacuum of interest, when you see a reversal, there's a lot to consider here. Now, in your GoToWebinar handouts section, there's a guidebook. And I don't want to go too in the weeds, but over 20 years now, under 20, between 15 and 20, John, we started to notice that some things happen and we make note of them. Sometimes the buy signals go down and sometimes the sell signals go up. And what I want to show you here is a pattern 7. And this book was written in 2014, I think. Can you guys see page 34 of 36 on the screen? Okay, I'll take my camera off. And these are just some things we've noticed over a decade or more. If you arrive at a buying pressure time, and that candle is fully engulfed by the low and high of an all-time high. Carrie, if you're here, we used to call this a canaveral trade because the rocket boosters would push the space shuttle up and then the rocket booster would fall back to Earth. A canaveral trade. And so what's interesting to me is this is the all-time high candle. And then, John, that signal is completely inside the wick of our all-time high. Do you notice that? Kind of cool, right? There's actually a parameter in the software which will turn on an arrow and show you that this is a pattern 7. I don't want to go in there and turn all that stuff on right now, but it's there and it will show you those patterns. So there's a very good chance, I think, that we might be looking at that final phase of movement. And again, just using predictability, there are 2 more signals. The 22nd, which was yesterday. No, day before yesterday. And the 31st. That's the window that we're in right now. The 22nd to the 31st. So you had this high and then this high. The 11th and the high around Thursday of next week. Just something to be aware of. When you think predictively, those things kind of kick in. And the 31st was the 2008 cycle. And November 1st was the warp cycle. So bear that in mind. And that same accuracy, again, translates all the way down to the 3-minute chart. Now, John, when we look at cattle feeder cattle futures, it's the same. There's no difference in accuracy. It doesn't matter that we're talking about cows and corn. So 3-minute chart, highs and lows are near the same tops and bottoms. And then as we go out in time frames, right, we'll go from a 3 to a 10, because you were telling Matt that a lot of the trades get placed at the beginning, right? You can see the signals for this morning, concurrent with everything I've been showing you. There's nothing special about your market other than it's special to you. 950 was the signal until 11:30 this morning, and now it's 11:30 until 11:10 tomorrow. So there's nothing unique about your market other than it's an uncommonly traded market. And same thing on the daily chart. 60–70% of the time, the signal appears near the high or the low. What's interesting to me about feeder cattle futures right now is the fact on the daily chart that when it was time to go up on the 18th, John, look how it just went into a range. So we're near an area up here where back in July 26th, they had a puncture of that line. And so that puncture brought you all the way down $14, $15 to the 23rd of August. I don't know cup and handles or teacups or Heikin-Ashi or Mr. Miyagi patterns. I don't look at any of that stuff. Right? Banks want us looking at those things because everybody's looking at those things, and then they do the opposite of those things. And you say, I thought for sure it was a cup and handle pattern. Oh. Right? I'm just looking here. The time that it was supposed to go higher, from the 18th until the 25th, it didn't make a new high, did it? No, it did not. So we're up in that same area here where the last time we were here, there was a collapse. When we were up around $250, it collapsed down. And so they came back up, couldn't put a higher high. It was time for the buy. And this is what's called a redistribution phase. Again, this is all I have to go on right now. Anytime you see a buy signal and it consolidates like that, this is a Wyckofian pattern. Richard Wyckoff telling us about price in relation to volume. And right here on your feeder cattle chart, it may not play out, but right now, the only place I ever see consolidation like this is what's called a redistribution phase, which occurs right before the next correction and markdown. So I believe the 9th was the first high, down, redistribution, and possibly another drop between the 25th and the 11th. So the risk is relatively low here. There's your high. The sell signal is coming to see if that plays out. Does that make sense? If we just follow the patterns of what big money is doing in your market, we're sort of seeing that play out. Here's a 60-minute chart for tomorrow. And so we're just sort of stuck in that range, and we can kind of work our way down to lower and lower time frames. So nothing unique about feeder cattle other than you can have these very low risk moments, like at 1:30 this afternoon. You could look and see, and you'll know when to be at your computer to check, because you'll see these in advance. You'll see that we had that established low, and at 1:30 the price was two below, and then it went by the close 1.9, 1.875. So the risk can be really low, where you can really get in there and take advantage. Sorry. So kind of in conclusion, we're sort of left with a really haunting question that we have to ask ourselves, right? That's pretty good, John. I would like for you to take advantage of those moves. This guy, without the aid of a Pentium processor, 3264 gigabytes of RAM, with a pencil and a piece of paper, he figures out what the banks are up to. He figures out what King Solomon understood centuries before him. Gann was a deeply religious man. In one of his books, he says that everything you need to know to be profitable is in the Bible. And one of the main themes was this idea of cyclic nature. There's a time to plant, a time to harvest, a time for peace, a time for war. And he keys in on these cycles. And now, 100 plus years later, we're seeing those same things play out, where that oscillatory cyclic nature of predictability is kicking in. Down, up, down, up, down, up. Plant, harvest, war, peace. To everything, turn, turn, turn. Only now it's very easy to get to that information very quickly, and you don't have to lay next to some Gann guru in a cave for 1,000 years trying to figure out what's in their brain. It's just right there. And Warp says, what do you want to know? What do you want to look at? Can I see the times in the future, please? There they are. They're waiting for you. This seems like a much less stressful experience to me, but I'm biased. So in conclusion, got to get moving here. Does the software provide a statistically relevant edge? If trading were a religion, Mark Douglas would be one of the apostles with a book in our Bible, that book being Trading in the Zone. If you haven't read it, read it. If you have read it, you know. And he says, listen, anything that produces an edge, a statistically relevant outcome, like a coin that's weighted more on one side than the other. So it's not 50-50 heads, tails, it's 60-40 heads, tails. That's a coin that'll make you some money. He says, look, your expectations will be in harmony with the possibilities. So Balwinder, you know, if you're trading a trend system, you're going to win and lose about the same, but your winners will be 150 to 200% of your losers. That's your expectation. And when we applied those rules with times that we gave to everybody 2 days ago, 4 days ago, we come out with $1,500, $2,000 on the biggest market most futures traders are looking at, the E-mini S&P. And we're sort of left with this uncomfortable question. What is trading? Is it about knowing what happened in the past? Like, John, forgive me for the overreaction to the cup and handle pattern, but that's in the past. It's not a future prediction. It's a thing that looks like a thing that's already happened. I look at the future. What is somebody going to do? We have a family friend and he dates the wrong woman every time. They cloned this woman and populated her all over the country. And wherever he is, he finds this woman. He has a type, and this type is pretty and very smart and absolutely destroys his world every time they meet. It's like that Will Smith movie with Charlize Theron. And when they get together, the city gets destroyed. And we're like, dude, you got to stop doing this. You have a pattern. And you can predict who's going to be sitting at the table next Thanksgiving. She's going to be blonde. She's going to be 29 to 35. She'll have a string of failures of businesses that she's been involved in, 180 boyfriends, and daddy issues. I can predict who will be sitting at Thanksgiving dinner next to this family friend this year with pretty high accuracies. And so you recognize that these guys, they're following a plan. And when I post these charts, how many of you remember when I posted it and I showed a trade that was long from the 11th until the 20th with one contract on the actual 2024 charts? And then I was long again from the 25th to the 11th. Nobody believed me. People on social media lambasted me, called me every name under the book. There's no semblance. And I was like, look, it's doing the same thing. It's actually doing the same thing. And nobody listened because they want to believe that it's not this. There's such a preponderance of factors against you that it's almost impossible to win. And so we kind of want to be part of your team. I love this picture. I love Formula One. I love MotoGP. I love this idea. There's a driver in the car. You're the driver, right? But there are hundreds of people that built this car and built this engine, maintained it, studied it, and got it in racing shape. That's who we are. We know who we are, and we're good at what we do, right? You're part of a team with us. And so our philosophy is if the game is rigged, if the financial juggernauts are running the show, if it is BlackRock and Vanguard and all these guys, why don't we just do it when they do it and call it a day? So one of the things that you get to do is be part of this Skype group, and you get to be a part of these people who've had the software before you that are telling you exactly how they do it. They're sharing in real time. They're putting notes up there as to when they got in and why. And you're sort of following in their footsteps, right? I love that. We have a community now of users that are sharing what they know and teaching each other for the first time. I mentioned also the Trustpilot rating. We have a near perfect Trustpilot score. You can come in here and review what other people have said to get an experience. And I encourage you to read all of them. There are some great ones and there are some not great ones. The beauty of Trustpilot is we can't post fake reviews and we can't take down ones we don't like. So please read the 1-star review, read the response, but you'll find most of them are 4- and 5-star reviews. And you'll get a clear sense of what that person's journey was and if it aligns with your own journey. But I love that this community is here for people and they're sharing what they know and what their entries were. And these people are here and will help you. The program that we're talking about is called Tachyon Warp, and we'll kind of bring it on home. You can draw stuff by hand on parchment with a quill if you want. I met a trader. This is a true story. There are people who are so obsessed with GAN. I know of at least one person who meets regularly with a spiritualist who claims to have the ability to bring Gann from the dead to a table where this trader talks to them through the spiritualists like Patrick Swayze and Demi Moore and Whoopi Goldberg. You don't have to do that. I think I'm better than he is. I literally do. Who would you have lunch with, dead or alive? Gann. And I would show him the software and go, what do you think? And I would record him when he goes, pretty good. You don't have to study dead guys anymore because the software is doing what he did without the 15-year learning curve. So there's hope for those of you that are on that journey. I just want to tell you, you don't have to do that. I know why you're doing it, but you don't have to. The program we're referencing is called Tachyon Warp. It's our flagship product. I'm going to put the link to it in your GoToWebinar chat box. And then at the bottom of that page, you're going to see a buy now link. It's shaped like a Willy Wonka golden ticket. And when you click on it, there's a cool box that pops up. I teach a course. Monday, we're off. Tuesday, Wednesday, Thursday, we trade from 9 a.m. to 11 a.m. Eastern. And John, if you want me to look at cattle futures in that room, I'm happy to. But that's an added subscription, $199 a month. We have a $200 daily goal. I hit that daily goal in the first 10 minutes of the market today. We record all of the sessions. If you can't catch them all, you can go back, play market replay over while the room is running and trade alongside of us after the fact. If that's something you're interested in, you can add it to your cart. If you don't need it or want it, go without it. I recommend you get at least 1 month of it to get a feel for how we use it. Purchase agreement, and then the buy now page has a promo code, WARPOFF. WARPOFF. And when you click apply, it takes $500 off the price. The gift of having sat here through my inane ramblings for an hour and 15 minutes back to you. So the promo code WARPOFF, and that's 2 lifetime licenses for NinjaTrader. No upgrade fees, no update fees as of yet. We're trying to figure out how to build that in for people who want to have updated versions in the future. Lifetime licenses that are transferable. If you want to leave it in your will to your nephew, Billy, we'll be happy to give it to Billy upon your unfortunate expiration. This will work with futures, forex, crypto, options, any stock, timeframes from 30-second charts up to daily and weekly analyses. So if you want to take options plays with calls and puts, you can do that while you're down in the trenches intraday trading with the retail guys. Any questions about that offer before we wrap up here today? Or anything we've gone over this afternoon? You can know what's coming in the future. All of the times on this chart on the right-hand side, the only reason they're here, it's not because of my guru prowess. It's not because of my extensive experience and knowledge. Although those things exist and are real, the only reason these times are here is because they've been happening over and over and over again. These targets are here because there is an anomalous pattern in time that keeps repeating that you're unaware of. And tomorrow you have a choice. John, it's the same. I've used that for every time frame in market, the 120 moving average for 15 years. I literally don't change the settings, so I can't be accused of curve fitting. In the live room, I use a 20 because it's faster and we have a few more trades. A 2-0 instead of a 1-2-0. But I keep the 1-2-0 because I started with it and I'm kind of a slave to appearances, and I don't like being questioned for changing things often. I want people to feel comfortable that I'm not changing the settings. So tomorrow when you trade, there's already a plan. There's already an airline schedule, right? I love this image. This already exists for the markets you trade tomorrow. It's already here. And 6 or 7 times out of 10, I believe, those highs and lows in the market you trade are going to be there. And so the question is, do you want to know or do you not want to know? And if you don't want to know, you should really ask yourself why. Because at that point, I think you're not trading, you're gambling. And I've seen people lose their whole families, their marriages collapse, their kids don't want to talk to them anymore. I've seen entire churches break up because one guy started trading and making promises. I've seen people go to jail. I've seen people sell off their businesses midway through building their dream home, locking themselves in an office for 20 out of 24 hours a day. Trading will destroy your life if you're not exploiting a statistically relevant edge, which is all I'm really offering here, a predictive one, a timeless one, but an edge nonetheless. So if you're in that second category and you're not moving forward with me, but you're going to keep doing what you're doing, which hasn't been working for years, it might be time to have a serious conversation with somebody about that. Pull back a little bit and question, are you really interested in profits or are you trading for something else? People trade to punish themselves. They trade to have fellowship in Discord rooms. They trade to have a story to tell at the water cooler, to have some element of thrill or excitement in their life. There are all sorts of motives that are completely unrelated from profit. And I didn't know that. When we started, I thought everybody wants to be profitable, and it's not true. But if you're on that downward decline, stop. If this didn't resonate with you, you didn't get a little excited about it, stop. Don't trade anymore. Seriously. Whew. May the wind be at your back. May the sun shine upon your beautiful, handsome faces. May the mountains lay low before you. May the valleys rise up to meet you on your journey. I am for you. I believe in you. I am proud of you. You learned one thing today that you didn't know a few minutes ago, and you're one step closer to accomplishing the dreams that you have for yourself. I think you can do it. I know you can do it. I see people do it every day in our program, in our support groups, in our reviews. And so keep at it. See it, believe it, move forward in it. There's a lot of truth to be had in the fake it till you make it group. So I offer encouragement and hope. If that's something you need right now, please consider signing up with us. You can find worse places to be. Have a great day, everyone. We'll see you on the other side. Be careful trading tomorrow if you don't have our times. There's very large people with tremendously large accounts waiting to take your money again. Be careful out there. Take care, everyone. Bye-bye.